Is there anything bullish happening in Europe? German 1-year baseload power overlaid with the BTP/Bund spread. Euro at parity, but Citi's economic surprise index between Europe and US has managed to hold recent lows. Yes, the latest move since mid-June has been down, but the gap is rather wide versus soggy euro. What if Europe doesn't go to hell? Europe is in extreme pain, but what if they sort it out? Credit protection has been the most sensitive measure of risk over past months. If you see Europe surviving this coming winter, then credit protection trades too high, on a relative basis. Charts shows iTraxx main, inverted, versus SX5E futures. Europe, diverging fear. Credit and equity protection are pricing the European mess slightly differently. European equity protection is not overly rich, at least not on a relative basis. EU inflation. Goldman's summary indicator of underlying inflation increased in July, driven by a broad-based increase across measures we track. Powell needs to crack markets. T.S. Lombard's Stephen Blitz's latest note can basically be summed up with: Powell's first problem is that inflation coming off the boil does not create the needed slack in labor markets. This requires a sharp downturn in equities. Why equities? Because this has been an asset cycle, not a credit cycle, and rich assets are this cycle's source of economic distortions. Powell's second problem is dispelling market belief that the put still exists. Global financial conditions. Financial conditions are tightening around the globe if you have a medium-term horizon. Obviously not true for the past month. The trajectory. Never forget the delta of Fed's BS. Barclays abate reminds us about the pace. The Fed's current runoff plan is expected to shrink its balance sheet by about $450 billion this year. This is much faster than in 2017 to 19, when it took nearly 20 months for the Fed's balance sheet to shrink by $500 billion. This is not a point of focus at the moment, but the narrative could make a comeback in September. Who fears the downside? Not many, at least not by the way they are pricing SPXQ, currently trading at the bottom of the 8-year range. Shaken, not stirred. Latest IE sentiment reading shows bulls are down and bears ticking higher.